In the modern day, the question isn't whether big funds are buying up property in the UK. The question is, why are they winning? We're seeing more and more corporate giants, pension funds and REITs deploying billions of pounds worth of cash into the UK's private rented sector, and it's essentially creating a two-tier market. If you're a property investor in today's market, you're competing against these corporate giants. So how can we actually make it a level playing field? In this video, I'll break down 3 reasons why they're winning at the moment and 3 ways we can outmaneuver them as smaller property investors to gain that competitive edge. If you're new here, welcome. My name's James. I'm the co-founder and managing director of a property investment consultancy called Frater Property Partners, but this channel is all about your education. As always, if you like the content, don't forget to hit the like button and subscribe to the channel, but let's get into it. So first and foremost, why are these big funds even investing so much money into the UK market? The answer is actually pretty straightforward. It could be broken down in just 3 words: demand, stability, and inflation. The residential property market in the UK offers these institutions long-term predictable income streams. It is essentially a better hedge against inflation than things like bonds and stocks and shares. Given the massive housing shortage we're seeing in the UK at the moment, as well as the increasing rental demand, the UK market is seen as one of the safest, most predictable and resilient markets globally at the moment. So from that perspective, there's no surprises why these big global institutions want to get involved. But how are they winning and how can we compete? The first way they're winning is the tax efficiency. Because they're global institutions, they've obviously got huge budgets to employ the best legal teams available. So what they'll do is they'll set up in the right way and make sure they're tax efficient in everything they do. Having said that, you can still be tax efficient as an individual investor. You don't need a massive legal team. Just speak to a tax advisor that knows what they're talking about, get the right advice before you start investing or while you're investing now, and make sure that you're set up in the right way moving forward. The second advantage these global institutions are seeing are the opportunity to secure at scale and provide certainty to developers. This certainty is really important to developers as it's become harder and harder to build in the modern day. So being able to sell 200 units to one institution creates that certainty and means that these developers can be confident that they're going to make the money they need to at the point of completion. The way to think of it is it's a lot easier to sell 200 units to one buyer than 1 unit to 200 buyers because you don't have to deal with that many different stakeholders. Having said that though, these big institutions will have a number of people that need to be involved in the decision-making process. There'll be a lot of boxes that need to be ticked, so it can take time for these big institutions to agree these opportunities with these developers. So sometimes it's not worth the hassle, or what a developer might do is keep a number of units to one side for an institution and then sell the other units on the open market or to individual investors. The third advantage these big global institutions have over us is that they've got millions of pounds worth of research going into the market, which means that all of their decisions are backed by a lot of money and a lot of data. This means that it's a lot less likely for their investments to go wrong because all of their investments are backed by significant data and significant research. One thing we have seen more of in the last 12 to 24 months is these big global institutions targeting different types of stock. Traditionally, these big global institutions would target city centre stock with big towers. They might get 250 units in a new city centre development in Manchester. In recent months, we have seen a slight sidestep from these global institutions though, with them investing in other stock as well. This means that they're targeting multi-billion pound deals for things that are usually a little bit more traditional for an individual investor or a local home buyer. As a home buyer looking for a house in one of these locations, it can cause significant headaches because how are you meant to compete with a global institution that has multi-billion pound deals that they're creating with these developers? It's essentially going to make it more and more difficult for these individual home buyers to buy this type of property. Having said that, it's not necessarily a bad thing for the whole UK market. We've got a massive rental demand in the UK at the moment. We need more homes on the market for renters, and this essentially means that rental figures shouldn't go completely out of control if there's new supply on the market. It's important as individual investors that we're aware of what's going on in the wider market so we can make informed decisions so we're not directly competing with these big institutions. But how do we as smaller investors outmaneuver these big institutions so we can be confident that we're still getting great deals for our long-term property portfolio? First thing that we can and should be doing is trying to take the emotion out of investing. Essentially, we need to focus on the data. Use the same format that institutional investors use and make sure that we're looking and making decisions based on real data in the market that we have available to us. Yes, we don't have the budgets that these big institutions have, but we can still do our own research, and if we target similar locations to these big institutions, we can be confident on the overall fundamentals of those locations. If you don't know what I mean by fundamentals, it's essentially the ingredients that make up an investment location. We're looking at all of these ingredients to make sure it's a great place to invest, not just for now, but for 5, 10, 15, 20 years down the line. Having said all of that, it's a lot easier said than done to take the emotion out of investing. We're individuals, we obviously care about this, we want it to go well, but if we can try and be as objective as possible, we're going to maximise the opportunity for success. The second thing we can do, and there's actually something that we can use to outmaneuver these big institutions, is to focus on bespoke developments. These big institutions are essentially constrained by the fact that they need scale. This can be a good thing for them at times because it means they can secure great quality deals because they purchase at scale, but it also means that they have to ignore a certain part of the market because it doesn't give them the scale in which they need. This creates a real opportunity for investors like us. If there's a development that has 50 units or less, the likelihood is these big institutions won't even consider it, even if it ticks all of the rest of the boxes. This means that we can target the same locations as these big global institutions, but we can get into an area where there's slightly less competition, as well as we're not having to directly compete with these big global institutions that obviously have significantly bigger budgets than us. This is often something we target at my business, Frater Property Partners, where we're going for more bespoke developments, whether that's houses or apartments. We're targeting locations based on fundamentals, but we're getting into areas that these big institutions kind of have to forget. The third and final way we can beat these big institutions as smaller investors is to move with agility and speed. Your biggest weapon when competing with these big institutions is your ability to move with speed. These institutions need weeks, if not months, to get committee sign off and then to go through the legal information to make sure that they get a deal all signed off. If we're set up in the right way, we can do all of this in the space of 7 days, which gives us a great opportunity to beat them to the punch. This essentially means if we can hit developers at a good time where they need to make a quick sale, we're going to beat these institutions to the good opportunities here. And it means that we can still get great opportunities and great investments for the long term without having to compromise in terms of location or in terms of the properties that we want to buy. It essentially means that if you're ready to buy an investment property, you need to make sure that you've done all your admin stuff before you're looking at these properties. You don't want to get stuck where you can't move quickly and essentially miss out on these opportunities. So to conclude, to beat these big global institutions, we need to approach things in the same way. So using data and research to back up all of our investments, but we need to move with speed and agility that they can't have. We can focus on bespoke developments, whether that's houses or apartments that are too small for these big global institutions, so we can still get really good deals. And you need access to these good quality opportunities quickly. If you're looking to get into this type of opportunity and you're not sure where to do it, my business, Frater Property Partners, helps with exactly that. We help you get into great quality assets in areas backed by data. And if you want support, then I'll put a link to our website, Frater Property Partners, in the description. But that is it for today's video. So I hope you found it useful, and I hope it's given you confidence that you can still get great opportunities and great deals in the current market, even if we're competing with these global institutions. Thanks again, and I'll see you soon.